drop. I actually think that this is more of a, mid-cycle kind of start of a new bull market.
Ladies and gentlemen, welcome back to the channel. Markets are trading lower, as well as that some of our favorite stocks, including AI stocks, Tesla, Nvidia, and the likes. Here in this video, I will share with you all of your breaking news you need to know. Donald Trump says that China violated their preliminary agreement towards a trade deal. That obviously does not sound good, and China put in their own thoughts on this measure, referring to some of the semiconductor export controls that they are unhappy with. Now, it also looks like we are making some good progress with Japan and India on a potential trade deal. We did get, in other news, a lot of economic data that came out this morning. Ladies and gentlemen, I'm going to bring this all to you in just a quick moment, including, as always, your Tesla stock breaking news, and there is quite a bit of it, so the work is cut out for us in this video. First things first, hit that like button and subscribe to the channel if you have not done so already, and let's get started. First and foremost, Donald Trump says that China violated its agreement with the US. He wrote on Truth Social that China, perhaps not surprisingly to some, has totally violated its agreement with the US on tariffs. Trade Representative Greer says we have other tools if the tariff ruling goes the other way as well. He said this in a CNBC interview today, referring to the panel of 3 judges that shot down the tariffs. This is going to make its way all the way to the Supreme Court, and it's going to be a grueling, tedious process. So keep that in mind. He does say that tariff litigation is not hurting trade negotiation. Greer says that he had emails and texts from foreign officials saying, "We're just going to keep negotiating with you as before." That is in quotes. And U.S. Trade Representative Greer says the U.S. is very focused on monitoring China's compliance on trade. He also says that efforts for a Trump and Xi call are ongoing. Now, overnight last night, early this morning, Scott Bessent actually said that at this point, the China tariff talks are stalled. That Trump and Xi need to have a conversation and where they stand and what they want. Or it's hard to get further progress at this point. Greer says on trade deals, quote, "We have a standing call with the Indian trade minister every day." So that India trade deal could be coming very soon. He says that China is slow on removing some tariff countermeasures. He says that we have meetings next week at the OECD with the Malaysians, the Vietnamese, and the EU, which is very important. Take a look at the clothes you have on, for an example. Odds are it probably comes from Malaysia, Vietnam, Thailand, or China. Greer says that China is the biggest trade deficit problem. The EU is next. And he says that he is going to meet his EU counterpart early next week. And he says we are not seeing major changes in China's behavior on trade. And he also says the US should have control over its critical sectors. Now, the US advanced goods trade balance came in at negative 87.6 billion. The forecast was negative 143 billion. The previous month was 163.17 billion. Here's what this means in English. We imported a lot less than we normally do. In fact, this was the largest drop in imports we have ever seen before. We've never seen a drop of imports on a month-over-month basis this large. Not during COVID, not during any recessions or depressions. We've never seen a drop like that. Again, that's kind of a good thing from a certain perspective because our trade deficit was a lot smaller, okay, just because we didn't import as much. That looks good from a headline GDP perspective. Following today's economic data, the estimate for Q2 GDP as of right now is coming in at 3.8%, up from 2.2% on May 27th. Okay. It says the nowcast of the contribution of net exports to second quarter real GDP growth increased from negative 0.64 percentage points to 1.45 percentage points. So it was a flip of about 2% on GDP, mainly because of the data that came out this morning. It says, while the nowcast of second quarter real personal consumption expenditures growth and second quarter real gross private domestic investment growth declined from 3.7% and negative 0.2% respectively to 3.3% and negative 1.4%. So real gross private domestic investment growth, that's really negative. So people are, again, as the Fed has said, are slowing down those investments. Also here on the day today, we had core PCE price index month over month that came in at positive 0.1%. That was in line with estimates. Personal income month over month skyrocketed to 0.8%. Expectations were 0.3%. Personal spending month over month came in line with expectations. So that's a good sign. We're just meeting expectations for the economy. Okay? The economy's not plummeting. People are still spending money. And keep in mind, last month was 0.7%. So when you're comparing month over month and you had a strong number last month and you had a positive number for this month, that's actually pretty good. You can't complain too much with that. Michigan consumer sentiment final numbers for May came in at 52.2, beating estimates of 51. 5-year inflation expectations came down from the estimated 4.6%. The last number we had was 4.4%. They came down to 4.2%. So that was really good. Consumer expectations came in at 47.9. Expectation was 46.5. So that's good. Current conditions came in at 58.9. Expectation was 57.6. So that's good. And look at this. 1-year inflation expectations kind of plummeted versus expectations. Expectation was 7.3%. We actually came in at 6.6%, even though that's higher than the previous month of 6.5%. So actually, we did get some pretty good economic data this morning. Now, it was also reported last night that Trump and Jerome Powell had a meeting at the White House. There was no projections given for the path of rate cuts, at least not to us. I'm sure that happened behind closed doors with, cameras turned off or whatnot. But one of the big things that Powell said was that if we see a shift in trade policies, if we see essentially less aggressive tariffs that don't pose as big of an inflation risk, we could get back on the path of rate cuts a lot sooner. Keep that in mind because I think that's something Trump is probably thinking about right now. Now, U.S. short-term interest rate futures pair earlier gains after PCE data. Traders keep bets on September Fed rate cut. U.S. Chicago PMIs came in at 40.5. The forecast was 45. So if there was any really just bad data today, it's probably that. But it's such a small data set, Wall Street really doesn't care about it. China's U.S. Embassy spokesperson says both China and the U.S. have maintained communication over their respective concerns in the economic and trade fields on various bilateral and multilateral occasions at multiple levels. He says that China has repeatedly raised concerns regarding the U.S.'s abuse of export control measures in the semiconductor sector and other related practices. White House Deputy Chief of Staff Miller says the U.S. has a wide range of options on China. He says we won't allow China to take manufacturing capacity from the U.S. And China's U.S. embassy spokesperson says China urges the U.S. to cease discriminatory restrictions and jointly uphold the consensus reached at the high-level discussions in Geneva. And then White House Deputy Chief of Staff Miller says China should seek the path of cooperation. So it's just like ping-ponging back and forth, like, hey, the U.S., you're doing this wrong. And then the U.S. is like, hey, China, just cooperate. It's like, I think you really need a Trump-Xi phone call at this point. I think Scott Bessent was on to something there. White House Deputy Chief of Staff Miller says the U.S. Trade Representative Greer and Lutnick will provide details on China. Japan says we confirmed progress with the U.S. in trade discussions. And here you can see that headline, U.S. goods imports fall 19.8% month over month, the biggest drop on record. And Miller says that Trump's hope is that China will choose the path of cooperation and common ground. Fitch Ratings today says the U.S. prime credit card performance is weakening amid economic uncertainty. So again, I think there's a lot of good news today. There's bad news today, specifically on trade talks with China. It's really hard to discern between like, is today a good or bad day? I do realize markets are trading lower, around a half of 1%. And again, it's pretty even across the board. Stocks tend to have, are at least tending to have pretty high correlation with each other. Apple's down 0.77%, Amazon's down 0.76%, Google's down 1.2%, Meta's down 0.3%, Microsoft just went red. Nvidia's a real underperformer today, down about 3.2%. Probably has to do with some of those comments around semiconductors and China. You see Tesla's down around the same as the headline S&P, down about a half of 1%. It's kind of just a typical Friday kind of day. We did talk about this on the channel previously. Like, today was going to be a big day, and it wouldn't surprise me if today was a really good day or just not a whole lot came out of today. And really, I think the bottom line in this market, you have to be prepared for the unexpected. You have to be prepared for this market to take off to the upside on one good headline, and you have to be prepared for this market to stall out here. You have to be prepared for this market to move down to the 100-day or 200-day moving average around the 575 level. Now, I'm very bullish overall on markets. I think Wall Street is really only focusing on the potential for negative outcomes. They're not looking at the potential positive outcomes. But again, in the very short term, even though I think we're going to get a 20% rally on the S&P from here into year end, I think the S&P is going to close around 700 on the SPY. Anything can happen if you're looking at just a couple of day period. And I would go as far as to say today was probably more good news than bad news. Exclude those China headlines, and I think markets would be doing very well today. The percent of stocks trading above their 50-day moving average falling a bit today to about 64.5%. Still on the relatively high side, but kind of in line with normal like bull markets, even though you're technically like not in a bull market, kind of in line with the typical market we've seen in the past couple of years. The CNN Fear and Greed Index, again, as a contrarian indicator, is falling from 63 yesterday. At one point, it was at 66. It's really been in the 66 to 68 range for the past week or two. You're falling to your lowest level now at 61. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, fear. Market volatility is neutral. Safe haven demand and greed, and junk bond demand and extreme greed. What's very fascinating about the put and call options here, and some news that we got earlier today, hedge funds and institutions are piling into shorts again. It's like they think this market is tapped out. And remember, I'm going to paraphrase this here, but there's lots of sayings on Wall Street that go something like this. You have to, stocks, without a wall of worry, stocks cannot go higher. You have to have problems that get solved and people to be wrong to get stocks to move higher. Like, without a wall of worry, that's when stocks tend to come down. Because if everyone's expecting good news and there's nothing to worry about, and then, oh crap, it's not as good as we thought, then people get disappointed to the downside. When everyone's worried, when everyone's in shorts and scared, and then boom, next thing you know, you get good news, stocks move higher. And that's usually why being a contrarian is seen as the most, positive, fulfilling outcome. When everyone's bearish, it's probably a time to be bullish. When everyone's bullish, it's probably a time to be bearish. And right now, almost everyone from, a major money perspective, hedge funds and institutions, are bearish. Even here in the AI Investor Sentiment Survey that asks investors one question, quote, what direction do AAII members feel the stock market will be in the next 6 months? Like a second grade level survey here. It's one question. You can't really get it wrong. 32.9% say bullish, 25.2% say neutral, and 41.9% say bearish. I mean, besides last week, the bears have outpaced the bulls and have had higher, overall percentages for like 2.5 months. And it happened again yesterday. Bears are outpacing the bulls by almost 10% again. where neutral investors are historically high from, kind of where we have been at the last year or so. Okay. There's a lot of bears. And with that, I think stocks can go higher. Now, I also want to share with you the 3-minute long clip today from CNBC where Tom Lee says this is the start of a new bull market. Something I've been saying for a while. I know, kind of bad timing. S&P's down about 1% at the time of recording this video, but I don't think he's wrong here. Take a listen.
You've been right. It's paid to buy the dip. Do you still feel that way when we get these sort of tariff back and forth headlines?
We still think dips are going to be pretty shallow. It's still the most hated V-shaped rally. I mean, the COVID rally was hated until we made new highs, and the rally from the fall of 2022 was hated until we made new highs. It's not any different this time. Hedge funds, I think, have really been very cautious. They were forced to sell near the lows, and we know there's $7 trillion cash. So while a lot of people are calling a top, I actually think that this is more of a, mid-cycle kind of start of a new bull market.
Why? Why do you feel that way with the economic data starting to weaken and the fundamentals changing as a result of all the tariff drama?
Well, I mean, if I just did a relative comparison, when I look at the company outlooks now compared to February 2025, I actually think the outlook's actually better. When we look at 2026, I think we have better visibility on deregulation and potential tax benefits. I think the tariff risk is actually diminished compared to February 2025. And while the Fed's been on hold this year, I think that there's a case to be made. They're going to be dovish next year given what's happening with housing, and I think the trend in core inflation. And that's more important to markets is the Fed in 2026 than what the Fed does the next couple of quarters. So, I mean, overall, I think it means PEs could go up.
Tom, are you more confident in the Mag 7 idea or the small cap idea?
Carl, it's an overused word, but I think it is a bit of a barbell. I mean, in the near term, the washed out groups we thought would be the beneficiary, and the Mag 7 was really leading that because so many of the Mag 7 peaked earlier and bottomed before the S&P did. And we still want to stick with that. But as I look at the second half, I think the small caps really have a strong case to be made because as long as we move towards a tariff resolution or the markets feel that way, then I think investors can actually start putting flows back into stocks other than the Mag 7.
Are you keeping a strategy in which tariff tensions go back up in your back pocket somewhere? And how does that read?
Well, I mean, I think we're all operating with the realization that there isn't necessarily an end game in sight for the tariffs. And I think these court rulings may push us a little closer to the end game. That's why I think it's a slight net positive. But at the end of the day, we all have to realize it's still a process. But I think investors are too pessimistic about the outcomes. I mean, I think we've been a little the market's been too pessimistic about what tariffs could do. I think we've had a lot of folks that turned structurally bearish because of Doge. But when we look at what's happened in the last couple of months, I think it's more bark than bite, I guess is the best way to put it.
So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, have a fantastic weekend, and I will see you in the next one.